Hi, this is Tim Biggam's Options and Volatility newsletter on a Jobs Friday. As the jobs number just came out, waited till just after that to record the video. So 143,000 jobs added, lighter than expected, but the unemployment rate dropped to 4%. So somewhat of a mixed bag. The unemployment rate, of course, has so much to do with participation rate, who's looking for jobs if they're deemed they're actually looking. So always a squishy number on the jobs front, but market taking a very muted response this morning to it. Last I looked, the S&P's virtually flat here. As far as the market generally, though, we're seeing a market that continues to head higher here, not too far off those all-time intraday highs at 61.28 as we closed right around that 6100 level. Closing wise, 6118 is the all-time closing number. That Monday kind of Trump tariff tantrum that we saw has been all but erased. We're basically back up to those levels once again. So it's no harm, no foul on tariffs and so forth, as the fears of tariffs being crushing certainly coming a little bit less likely as they start to soften here. You can see that uptrend line that we've been talking about for a while now continues to hold brief, and I do mean brief forays down below it here, but still holding right at that 20-day moving average, right? And right at the 6,000 level. So should be interesting times on the market here. We're pretty much neutral on a technical front too after the pullback. So not overbought, not oversold. Continue to pretty much be at the same levels that we were post that kind of Trump bump, right? After the election, as it kind of ran to new highs here. We're kind of back at those levels, have been in a sideways market, certainly, with no major pullback. So interesting times indeed. Valuations, as we talked about, getting stretched as well. That 10-year yield back below 4.5%. So certainly that's somewhat supportive of stocks. Although when you look on a long-term basis, right, it's still at the highest levels pretty much we have seen over the past 5 years, outside some quick peaks here towards that 4.75 recently, 5% back summer last year. So interest rates have gone up, valuations have not come down. Something we'll certainly have to give on that front. And speaking of something having to give here, taking a look at unusual option activity, Palantir post earnings, right, continues to see big call buying, especially out there. This is from yesterday. We saw option volume approaching 1.75 million contracts, right, which is basically 2.5 times the normal. This again is post earnings, came out February 3rd. Stock gap opened huge, right? We're still at over 50% IV, so options still expensive, and they picked up 12% yesterday from the prior day, simply because everyone racing in to buy these out of the money call options. So we're looking absolutely to take advantage of this big bump up in Palantir, and we'll take a look at the chart here as the stock continues to just head higher here. Huge gap post earnings, and earnings were good, but I mean, still only 14 cents, right? So valuations off the charts in Palantir, and we're seeing this huge move higher, right? As everyone rushing in here, getting hugely overbought on a technical basis. You can see, 9-day RSI over 85. Bollinger percent B over 100 here. MACD at the highest readings we've seen all year. Shares trading at a huge premium to the 20-day moving average. So we're looking to sell a out of the money call spread, take advantage of that jump in implied volatilities. Here you see the normal vol crush, and now we're actually seeing it head higher again. So what does that IV lift mean? It means you can get further out of the money for the same net credit on out of the money call spreads and put spreads, or get a bigger credit being a similar distance out of the money. So we're going to take advantage, kind of blend the two, and probably position about 10% out of the money 2 months out in time. Take advantage of the fact the stock is absolutely getting oversold here, overvalued, won't even go into valuation metrics. And Ivy actually has picked up dramatically post earnings here. So until next time, as always, here's to good trading. Take care now.